Despite all the death and destruction we're seeing across the stock market, we're actually not seeing as much bearish action in the crypto spaces. In fact, we are in the green for a lot of different cryptos, including Bitcoin Cash, Ethereum Classic, Polkadot, Chainlink, Polygon, and a handful of others. And this has actually been the case over the past several days, while the stock market, the Dow, the S&P 500 have all been on a downward tear again for several days. Cryptos have been a bit more resilient despite today's 3% down day. Again, we are up over 1% in Polkadot, but we're not totally out of the woods yet. This is the 1 hour chart that we're seeing. We have a downside setup in place that could take us a good bit lower, but it does not become my official primary pattern until we see a bit more validation. So far, we have 3 waves up, which is marked in orange, and we've had a very deep 4th wave, almost too deep. So this is definitely not an impulse up. There's no way it can be. However, if we get that 5th wave up, we could call this an expanding diagonal, which I don't love, but we're seeing better setups in a lot of other cryptos and altcoins that could give that pattern a bit more of an edge. So what we need to see is we need to see a very sharp reversal, and we need to exceed this high from April 2nd of 2382. If we do that, the downside red setup immediately invalidates, and we would have that higher high. Then we'd expect a sharp pullback for a second wave, and then we'd be off to the races. If that doesn't happen, if we fall anywhere short of the green line at 2382, there's a chance we will fall through the red pattern. So our second wave bounce could take us anywhere from, what is this, 1963 to 2129. Anywhere up to this green line is fair territory for a second wave pullback. In this case, it's kind of a pull up because we are talking about a downside setup. And if that is the case, our third wave could take us down to $12 or lower, with an ultimate bottom down to $9 or even lower than that. Now, this does not become the primary pattern until we follow through. So we first need to exceed the low that we have of $17 or so. That will be a very strong sign that we are going to follow through. And it doesn't become official till we break about $14. It is at that point where we have invalidated this upside setup that we have. That's the low we hit on February 24th. And if that does happen, I will be looking to unload some of my positions. I'm not going to go too crazy selling, maybe up to 50% allocation I might take off the table, with the expectation of buying the dip once we do get a bit lower. That's my strategy. I don't have it totally finalized yet, but for you, please follow your own strategy. If you are lower risk, trying to take some chips off the table, make sure you make that plan and execute as per your plan. Otherwise, it may make sense just to hodl through, especially if you bought Polkadot a long time ago. You may already have a pretty low cost average. So this is just, well, just a flesh wound, nothing too deep. You're not hitting any internal organs with this. Shifting to the big picture, nothing has changed, nothing is invalidated. Everything's exactly as it was before, in which we possibly have a triple nested 1-2 setup with, well, we have this super large degree first wave, which may or may not be real because we don't have enough history to call it what it is. But the rule of 61.8, Polkadot seems to love that Fibonacci number, in which you have each subsequent rally getting up to about the 0.61 extension of the previous 1-2. So if that is the case, you have a 1-2, 1-2, and another 1-2. And well, we are seeing something materialize as we speak, but it's not the best looking pattern. Again, it is clearly 3 up. There's almost no way to count this as 5 up yet. And in Polkadot, more than a few of the other coins, this rally structure here does look like it could be some kind of an impulse or a diagonal kind of rally. It looks like a 5 wave. It doesn't have as much chop and whipsaw as otherwise would. So it looks more like a C wave than it would in something like Bitcoin Cash, which I just reviewed, in which you have a clear A, B, C kind of pattern going up, which would make it more likely it is a true third wave. When we look at the MACD, same story. We had a nice divergence, although we're starting to lose it a little bit. There are some, well, we had a great sign that the bottom was already in, but now we're starting to turn back around. When we look at the smaller picture, we are getting a nice divergence setup again, where you're having your MACD turning back up despite having a double bottom. So that could be a sign of a bottom, but is it just a local bottom with a second wave bounce and a bull trap to come? Or is this the bottom before we have that higher 5th wave? We don't know yet. We're going to have to see where we get. But as I mentioned in our last update, we would expect Polkadot to rally in impulsive fashion. So expect a 5 wave rally as such. And if nothing else, if this really is the entire A wave, with this dip being a B wave, you would still expect to see an impulsive rally, 5-wave structure getting up past the $200 mark. I know it sounds like a pipe dream right now, but that is what the calculations are calling for. When we look at our Fibonacci extensions, we do have two bullish patterns here, green and purple. Green is the impulsive rally structure, so we're waiting for that to materialize. Purple would be calling for more of a diagonal structure, as shown with the purple notation. At least in the near to intermediate term, there is no practical difference between either. We're not going to see any kind of divergence between green and purple until much later. So that is not something to be worried about right now. Let's focus on what is in front of us. Again, if you are planning to unload some, you may get your bounce, get a chance to do it. If we break through green, the red pattern, well, the immediate downside is dead, and it becomes increasingly unlikely that we have that lower low after all. And if we do have that lower low after all, I would expect a very sharp reversal, because we have been pulling back since November of 2021. So it's been 2, 3, 6+ months that we've been in a correction. So when there is a reversal, it should be pretty sharp. And there's a history of exactly that. August 2020, we crashed down to 260-ish, spiked up to 675 within a matter of weeks, it seems like. Less than a week, actually, just about a week. And then we've had numerous other examples of exactly that happening. Went from $10 to about $35 in about, was that 2-3 months? So do not get in the way of a sharp reversal. We are really stretching the rubber band. My overall bullish bias still remains. So I'll have plenty more updates coming your way. Subscribe so that you don't miss those. And until next time, thank you for watching and happy trading.